Welcome to our CFP exam prep discussion on estate planning, specifically focusing on the applicable exclusion amount and how it affects estate and gift taxes. This is a crucial concept that frequently appears on the exam, and understanding it thoroughly can make a significant difference in your score. Let's break down the applicable exclusion amount, which is essentially the amount that can be transferred during life or at death without incurring federal gift or estate tax. For 2023, this amount is $12.92 million per individual. Many candidates make the mistake of confusing this with the annual gift tax exclusion, which is a completely separate concept set at $17,000 per recipient for 2023. Here's where it gets interesting. The applicable exclusion amount is unified, meaning it applies to both lifetime gifts and transfers at death. Think of it as a cumulative credit that you use throughout your life and at death. When working through practice problems, remember that taxable gifts made during life will reduce the amount available at death. Let me walk you through a practical example that often trips up exam takers. Suppose Sarah makes a taxable gift of $5 million in 2023. Many candidates incorrectly assume she has used up her entire exclusion. However, she still has $7.92 million remaining from her $12.92 million applicable exclusion amount. If Sarah passes away in 2023, only her remaining $7.92 million can be used to offset estate taxes. A common mistake on the exam involves the calculation of the taxable amount when gifts exceed the annual exclusion. Let's say Robert gives his daughter $217,000 in 2023. The first $17,000 is covered by the annual exclusion. The remaining $200,000 uses part of his lifetime applicable exclusion amount. The full gift isn't taxable unless Robert has already used up his entire applicable exclusion amount. The exam often includes questions about married couples and portability. This is where the deceased spousal unused exclusion amount comes into play. If John dies and only uses $4 million of his $12.92 million applicable exclusion amount, his wife Mary can elect to use the remaining $8.92 million in addition to her own exclusion amount. Test takers frequently forget that this election must be made on a timely filed estate tax return. When solving problems involving the applicable exclusion amount, always start by identifying the year in question, as the amount changes periodically. Also, pay attention to whether the question involves lifetime gifts, transfers at death, or both. The exam loves to test your ability to track the use of the exclusion amount across multiple transactions. Remember that the current high exclusion amount is scheduled to sunset after 2025, reverting to approximately half the current amount, adjusted for inflation. The exam might include questions about planning strategies related to this upcoming change. To solidify your understanding, focus on these key points. The applicable exclusion amount is a unified credit applying to both lifetime gifts and transfers at death. It's reduced by taxable gifts made during life. It's completely separate from the annual gift tax exclusion, and it's portable between spouses if properly elected. When practicing exam questions, always read carefully whether you're dealing with annual exclusions or the lifetime applicable exclusion amount. Watch for questions that combine both concepts, as these tend to be the most challenging and require careful calculation. Master these distinctions, and you'll be well prepared for the estate planning portions of the CFP exam.